Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical and news-based analysis. Today, on November 21st, 2025, we are taking a deep dive into Intel Corporation, ticker symbol Intel. There is a fascinating push and pull happening right now between positive company-specific news and some serious headwinds affecting the entire semiconductor sector. We'll break down the latest headlines and then jump into the charts to see how it all translates into price action and what key levels you need to be watching. First, let's talk about the news, because the narrative is quite mixed. On the positive side, Intel has had some significant wins recently. A few days ago, reports highlighted a strong Q3 2025 performance, and the company announced a strategic partnership with competitor NVIDIA, which is a massive development. Back in September, the market also reacted very positively to Intel's sale of a majority stake in its Altera division and its ongoing cost-cutting measures. These are fundamentally bullish developments that point to a company in the middle of a successful turnaround. However, the broader market sentiment has soured significantly in the last few weeks. There is growing chatter about lofty valuations in the tech space and fears of a potential AI bubble, which is causing a sector-wide sell-off in chip stocks. We're also seeing general market anxiety over Federal Reserve interest rate policy and global regulatory actions, all adding to the uncertainty. Now, let's look at how this story has played out on the daily chart. Looking at the bigger picture, this has been an incredibly volatile year for Intel. We saw a catastrophic gap down in early August, where the stock plummeted from around $29 all the way down to nearly $21 in a single day, followed by a slide to a low of $17.66 on April 8th. After that devastating drop, the price spent months building a base, consolidating in a range between roughly $18 and $22. This basing period is crucial, as it shows the market finding a floor after a major shock. The turnaround really began in mid-September, and this is where we can directly link the news to the chart. Let's zoom in on the period around September 16th. Right here, on massive volume, we see the stock gap up significantly, breaking out of that long consolidation channel. This move was a direct reaction to the positive news about the Altera stake sale and Intel's improved financial discipline. It was a clear catalyst-driven event that signaled the end of the downtrend and the beginning of a powerful new uptrend. Switching back to the full daily view, that breakout in September kicked off an incredible two-month rally. The price surged from the low $20s all the way to a 52-week high of $42.48 in late October. This powerful move was fueled by that renewed optimism and the strong Q3 earnings report. However, since hitting that peak, the stock has been pulling back, which brings us to the present situation. This pullback aligns perfectly with the recent news about AI sector valuation concerns. And yesterday, November 20th, that pullback turned into a very sharp sell-off. The stock opened around $36 and closed near the low of the day at $33.62, a very bearish sign on significant volume. This action tells us that the sector-wide fears are currently outweighing Intel's positive company-specific news. So, let's identify our key levels from this daily perspective. The immediate and most critical support level is yesterday's low, right around $33.50. If that level breaks, the next major support zone is the psychological $30 level, which was a key breakout point in late September. To the upside, resistance now sits at yesterday's open around $36, followed by the $38 to $39 zone, and ultimately the major peak at $42.48. Now let's switch to the 1-hour chart to analyze this recent drop more closely. Here we can see that yesterday's session was relentlessly bearish. The price sold off from the open and barely managed any meaningful bounce throughout the day. This indicates that sellers were in complete control. The price is currently consolidating in a tight range just above the low. This is a critical moment for the stock. Bulls need to see price hold this $33.50 area and start reclaiming ground above $34 and then $35 to signal that the selling pressure is easing. A failure to hold this support would likely open the door to that next leg down towards the $30 target we identified on the daily chart. For an even more granular view, let's look at the 15-minute chart. Here we can see the anatomy of yesterday's sell-off in detail. Notice the surge in volume during the biggest down candles around midday and into the afternoon. This confirms strong conviction from the sellers. Price action in the overnight and pre-market session today has been relatively calm, hovering just above yesterday's lows. This is the proverbial calm before a potential storm. Day traders will be watching the opening bell very closely. A gap down or a sharp move below $33.50 on volume would be a strong signal to the short side. Conversely, if buyers step in and defend this level, pushing the price back above the $34 mark, it could trigger a short squeeze and a relief bounce. All right, let's bring it all together and recap the key takeaways. Your major support level to watch is yesterday's low around $33.50. Below that, the next significant support is at the $30 mark. Key resistance levels are now at $36, $38, and the long-term target for bulls remains the 52-week high of $42.48. So, what are the likely scenarios? Let's start with the bearish case, which in the short term, I'd place at about a 60% probability. The momentum is clearly to the downside after yesterday's aggressive selling, and the negative sentiment around AI stocks is a powerful headwind. If Intel breaks below $33.50, a move to test $30 seems very likely. This scenario would be reinforced by continued weakness in the Nasdaq and other major chip stocks. Now for the bullish case, which I'd give a 40% probability in the immediate short term. This scenario hinges on the $33.50 support level holding strong. If buyers defend this level and the broader market finds its footing, a relief rally back towards the $36 resistance level is plausible. The long-term fundamental story for Intel's turnaround remains intact, so long-term investors might see this dip as a buying opportunity. Confirmation for this case would be the price decisively reclaiming the $35 level on good volume. Ultimately, the battle is between Intel's improving fundamentals and the market's current fear. Watch that $33.50 level like a hawk, as it will likely dictate the next major move. Thank you for joining me on Explain the Charts. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own thorough research before making any investment decisions. Don't forget to like and subscribe for more in-depth chart analysis.